Thanks, Asia, and that's right. The ruble's fall to a record low versus the dollar and the euro, highlighting those struggles. It dropped to nearly 55 rubles per dollar in early trading before recovering slightly. Now, the ruble has lost more than a third of its value against the greenback and the euro since the start of the year. And just this past Monday, the ruble had its biggest one-day decline against the dollar since 1998. But Russia probably will not be facing more sanctions for now, at least. There were expectations that Moscow would be punished further after U.S. Secretary of State John Kerry met with NATO officials, but they only reiterated their opposition against Russia's actions in eastern Ukraine. The EU foreign policy chief is holding out hope for talks with the Russian government. And besides the slumping ruble, Russia is also dealing with other factors pressuring its economy. The government expects to lose an estimated $100 billion in oil revenue next year due to plummeting crude prices. Oil and gas exports account for 50% of revenue. Inflation is also expected to hit nearly 10% in 2014. That's after the central bank was forced to raise interest rates several times this year to try and stabilize the currency. And all of that has investors somewhat nervous. They're expected to pull out an estimated $125 billion from markets this year. The government forecasts another $80 billion in capital flight in 2015. And just to make the economic picture even bleaker, Russian officials are saying that the country may fall into a recession next year. All right, joining us now for more on Russia's economy and the impact of sanctions is Charles Ortel, Managing Director of Newport Value Partners. Charles, good to have you back with us.
Thanks for having me on, Michelle.
Okay, Charles, Russia is warning that its GDP may contract by 0.8% next year, as opposed to a previous growth forecast of 1.2%. Is this a sign that the sanctions are working? Is this due to oil prices or a combination of the two?
Well, clearly sanctions have had some impact on the country and making it less easy for people in America to invest over there and making Western people less inclined to take the kind of systemic risk that you face thinking about Russia. But when you take a gigantic step backwards, the biggest thing I think driving what's going on around the world is there's a global slump in virtually every major country in the world. The demand is contracting. And
so you don't think the sanctions have had an impact?
Ultimately, I don't think they're going to accomplish anything significant. They're not going to advance America's interest vis-a-vis its geopolitical standing in the world. I mean, what Vladimir Putin has done, I think, extremely astutely, and mind you, his theoretical approval rating, we don't know how real the polls are, is, I think, double what Obama's is right now. He has pulled off some major league coups, including with China and India, and now with Turkey. Cementing long-term arrangements to supply this energy resource into these growing vast markets. And meanwhile, unlike the United States, his debt is minuscule in comparison to his foreign exchange.
But Charles, Russia is hurting. They said that the sanctions will cost Russia around $40 billion in lost economic activity. Russia's already spent about $70 billion propping up the ruble. Putin, one of his biggest legacies has been the fact that he brought economic strength and has stabilized the ruble in his 14 years of power. This can't be feeling good for him nor the people back home in Russia. How can you say that the sanctions have had no impact?
Well, they've had no meaningful impact. They have not. I mean, Russia is still an aspiring global power. It's flexing its muscles as we speak. It recently sent warships through the English Channel. Everywhere they can challenge the West, they're doing so. There's a big prize in the Middle East. I think they're backing Iran. They're looking aggressively into the Middle East. They would not be upset to see Iran ascend in power in the Middle East. There's Saudi Arabia sitting there as really virtually an undefended country with a lot of resources, as is the UAE.
Let's talk a little bit about Iran and Saudi Arabia and how oil fits into all of this picture. And you cannot argue that Russia has not felt the pinch of plummeting oil prices. And some say that this is due to Saudi Arabia refusing to cut output at OPEC, and that perhaps there is some kind of alliance between the U.S. and Saudi Arabia on that front.
Yeah, I mean, there's no question that, I'm not saying Russia hasn't been hurt at all, I think, but the long view. I mean, resources, after all, are a 10, 20, 30, 40-year game, maybe. And what Russia has, I think, very successfully done is built out its long-term potential in energy with these major customers. As far as Saudi Arabia is concerned, they're vulnerable. UAE is vulnerable, Bahrain is vulnerable, Kuwait is vulnerable, And I think what Russia's looking to do here is ultimately maybe to punish these states that are
well, there is talk of a potential different cartel with Russia joining forces with other big oil producers that have been hurt by OPEC's refusal, like Venezuela, like Nigeria, like Iran. Is that likely?
I think it's probable. I mean, I really do. I mean, Russia, you could go back. I encourage your listeners to go back to the Davos speech that he gave in January 2009. Very interesting speech where he predicted all this, Vladimir Putin, and advised the West against the course we've been following. I don't think he thinks he's losing, and I think he's got a captive audience.
Well, you know who also doesn't indicate that it's a losing proposition, and that's Russia's stock exchange. The MICEX index has gained steadily since mid-October. It's around 6% higher since the start of the year. But at the same time, the ruble has dropped so significantly. How do you reconcile those two divergent data points?
Well, I think we're in a world where central banks control everything, and they've pushed reference interest rates around the world so low that we're really in almost a virtually imaginary market. You can't look at market pricing as being dispositive of true worth. So, you know, I think it's possible for the ruble to decline a lot. The local operating costs in a Russian company would be low if they sell on a world market, which most energy companies do. That's actually good.
Well, Charles, someone that echoes your views and is bullish on Russia is legendary investor Jim Rogers. We had him on CCTV recently, and he said that the sanctions are backfiring and are serving to push the China and Russia closer together. What are your thoughts on that?
Well, I'm very happy to be mentioned in the same sentence with Jim Rogers. I admire him
Sure you are.
greatly, but no, I think that's absolutely right. People look around, they look at the United States under Obama, huffing and puffing and drawing red lines and doing this and doing that, and ultimately not really acting, getting anything done. And here you have a country that was bankrupt in 1998, you know, the Soviet Union and Russia, pushing the United States around in different places and not really bleeding too badly from this aggressive sanctions regime.
Charles, very quickly, the U.S. is pushing the EU to move ahead with further sanctions. Does the EU have the appetite?
Absolutely not. I mean, I think the EU should be looking east and looking at the vast markets that are opening up there as markets they need to penetrate. Germany needs to sell machinery to Russia and to China and to India, et cetera. Germany would be wise to tap into that market rather than playing backseat to a United States that seems to be acting in a way that you can't really analyze well.
Okay, we're going to have to leave it there. Always an interesting conversation. Charles Ortel, Managing Director of Newport Value Partners. Thank you.